What's going on, everybody? It's June 6th, 2023, Daylog episode number 12. And today we're going to cover ES, price action unfolded, and some of the things covered inside of the Telegram this morning. So looking at the daily time frame here, we slightly IOFED'd the fair value gap in here, saw a slight expansion higher. Today was very, very sloppy in terms of PA and very much seek and destroy profile. It was a bit hard for me to navigate, even though I was able to call some draws on liquidity and kind of call where price should likely lead to. It was still a bit hard for me to navigate. And that has to do with no economic news driver events and where we're at in terms of the weekly profile. I'm not sure if yesterday was the low of the week. We'll have to see. I mean, Thursday is probably going to be the most fruitful due to the economic calendar. We may see the same thing tomorrow. So we're just in these type of conditions. We're not out of these type of waters yet. And we just have to deal with it. It is what it is. I came to the conclusion that, no matter how much you want to complain about it or bitch about it, really it's not going to change anything. You just have to submit to it and either be extremely patient, wait for your model and your setups to form. And even like me, I got stopped out today for about 3 handles. I'll show that. And it's been happening a lot more frequent in these last few months, even this last month here. And it's just the conditions that we're in. And sometimes your model will fail, even though it presents itself, even all the rules are there. It's just the type of conditions that we're in. And either you can elect to not trade them, or you can be very nimble and protect yourself with your equity curve and your risk management and just take the risk. And there are really some good setups that do form. I would say about 1 or 2 a week at most, frequently, but that's just where we're at right now. So I want to make that known as well. I don't know when we're going to get out of this type of high resistance liquidity run. It's been for months on end now, and ICT's mentioned it. He even mentioned in the live stream today how there's not a lot of big funds or money that are wanting to come into the market just yet. They eventually will, and eventually we will move into a low resistance liquidity run type of market and profile. And once we do, it's going to be easy picking and easy money. And you're going to see, if you never experience that type of price action, how easy it truly is. Because I've experienced it and it's extremely easy. So just hold tight. We'll get there eventually. I have high hopes for the next few months here. So I just wanted to touch on that. So the daily time frame, I would like to see tomorrow if we would want to expand towards the volume imbalance. I don't see a reason to necessarily go back into the fair value gap. The fact that we IOFED'd it and closed the way we did, it's kind of telling me and signaling me that it may not want to revisit this. It may want to leave it open and may want to expand towards the volume imbalance and the premium end of that SIBI there. So that's my idea for tomorrow. 4-hour time frame, didn't quite close under the fair value gap, so the bodies were telling the story in here. We expanded a little bit higher, and you can see the back and forth today, even on a 4-hour chart. So I want to see tomorrow, can we get expansion into the volume imbalance? To me, that would personally be the best bet. I would rather price continue higher and continue this momentum of the upside, because I don't see anything to the downside, like I've been mentioning, that price could retrace into. So I'd rather it just continue as is. 1-hour time frame, we really worked inside of this 1-hour fair value gap, and you can see the bodies were telling the story today, and we were just working within it. And even the 1-hour, you can see how much back and forth price action was really unfolding today. So I'll mention how you can basically know when to sit out, and these type of days will really, really hurt you, because you'll think you'll see something, you'll go long, it'll stop you out, you go short, it'll stop you out, and you don't want to be in type of these environments. So once I got stopped out, I immediately just closed the charts, because I don't see anything fruitful, and I don't care if I miss anything. These environments will just tear you apart if you let it. So moving down into a 15-minute time frame, I think this is where some of the most clear price action was unfolding today, and even the 15 or the 5-minute as well. So right at the open, we took out sell side liquidity, and prior to the open, I was watching how we were in this tight range overnight. So we had buy side above us and sell side beneath us. If we're in a bullish climate, then we should be expecting sell stops to be ran and then for us to trade higher, right? So that was my idea this morning in the Telegram and how I was annotating. I'm not looking to go short. There's no reason to go short, and that has to do with narrative. That has to do with higher time frame. What's the higher time frame telling us? It's telling us that it wants to trade higher. So shorts are low probability. And I know some people were looking at a 5-minute time frame in here right at the open, how we displaced lower and we left a fair value gap in here and one in there. Even on a 15-minute time frame, there's a fair value gap. This is where narrative comes into play, and you can't just look at certain PD arrays in a certain model and just look to short, because that has to do with narrative. That has to do with understanding intermarket relationships, where price should really draw towards. That's the things you can't really see on the chart necessarily. You can see it on the chart, but you can't see it in that time frame or the 5 or the 15-minute. It's happening on a daily time frame, a weekly time frame, or happening in another market that's indicating towards you that you shouldn't be shorting. So looking at the 5-minute time frame, make note that we dug down into this fair value gap here on the 15-minute time frame, and this is also residing inside the daily, the 4-hour, the 1-hour, the 30-minute as well, 15-minute. So all of this is happening right at a bullish PD array. So that's the reasoning why as well, I'm not looking to go short. There's no reason to look for that. And if I'm bullish, it's a good sign that we're taking out sell stops. We have relative equal highs resting above us, and price should gravitate towards that. So we displaced higher in here, and we didn't really leave a fair value gap. Even if you're looking sub 5-minute, looking at the 1, 2, 3, or 4, there's no fair value gaps really forming. So what I was looking at the 5-minute was this inversion fair value gap. As soon as we closed above it, this becomes an inversion level, right? And then there's a small volume imbalance that price was working inside of. So to me, this isn't my model. This isn't a price signature for me to get into. It's not my multiplier, but it's something that I'm aware of, and it's how I'm reading order flow. So that might have been your multiplier. And by all means, if you went long in there, that's perfectly fine. It's just not personally my model. So you have to understand when you're looking at other people, other social medias, you really just need to tune everything out and listen to yourself and what really works for you, because what works for you may not work for somebody else and vice versa. So I think that's a very important note in here. Even though I was able to call the draw on liquidities today, there was nothing in here where I was able to position myself. The best opportunity was actually this 5-minute fair value gap in here. And I noted right at this point in time how we were still trading sideways. So inside of here, we are still trading sideways, especially on a 1-hour or 4-hour. We're stuck in a really tight range. And when I'm looking for a large expansion, or I'm looking for a good high probability setup, I'm looking to see if the 1-hour, the 4-hour, and even the daily can expand higher or lower. And at that point in time, I really couldn't make the case for it. Even though there was a fair value gap in here, we did expand higher. I still had a draw on liquidity on the board. It just wasn't enough for me. So we dug down into this, and then we expanded away from it. When we attacked the buy side liquidity at 42.87, I annotated it as well. So today I annotated 42.81, and then 42.85, and then eventually 42.87. And to note as well in here, we had this yellow line is the new day opening gap from over here. So that's when we opened up today or yesterday. The green line is the new week opening gap. So that was in confluence with that fair value gap. Price dug down, IOFED'd it, and then we expanded away from here. And even if you're looking at it, it's very high resistance, meaning that it's taking a long time to displace. So you can see in here, even from the entry point, I mean, it's taking about 30 minutes to displace. And this may be normal to some of you because you haven't experienced low resistance, but this is not favorable. I don't enjoy this type of condition where you're sitting in price for this long, and where you're basically moving in and out of profit about 5 handles or so. You really want to see fast price action away from PD arrays, which we did see, but then it just, was stagnant. And then we had this large movement, and then we dropped lower in here. So once we moved higher in here, there was a fair value gap in here on a 5-minute time frame. And I've moved down into a 1-minute time frame. To make note as well, that 5-minute got refined into the 1-minute in here. So we dropped down into it, then we displaced away. But in here, we had the 5-minute coupled 4, 3, 2, 1. And I was looking at how there was the new week opening gap. the 5-minute time frame for value gap, and I believe we were dropping down into a discount as well. So right at that equilibrium, we were dropping down into it. I'll show my entry. We dropped right down into there, and I entered right in here. And my idea was I was looking to target the SIBI up here because I really didn't believe that we were going to expand super high today, looking at the 1 hour and the 4 hour. And if you're wondering why I didn't enter in here and why I entered in here, is because to me at this point in time, it proved itself to me. At least that's in the moment. That's what I was thinking, is it proved itself that it wants to go higher. When I was looking at the 1 hour, I was still a little bit hesitant, but I was willing to take the chance. It was very low risk. And I was seeing if we could expand into that SIBI for about 10 handles. From there, I was going to completely close and collapse the trade because I expected possibly a retracement like this. We just stayed stagnant here for about 15 to 20 minutes. And then we dropped a little bit lower in here and I immediately closed the trade. It went underneath this low in here on the 1 minute. So when I was reading the 1 minute, I saw these relative equal lows being built up. I allowed this to take it out. We expanded higher and then we dropped once more and I immediately closed the trade because to me at that point in time, if it took out sell stops inside of that parent BISI, it should have already expanded and it was taking too long for me. So I ended up getting stopped out for about 3 handles. It is what it is. I took the chance. The model was there. This would be model number 3 for me, where I'm just looking for a continuation pattern off the context that we took out sell stops in here, higher time frame, bullish PD array. We expanded away from it. And I was looking to see if we could target that opposing SIBI. So after we dropped all the way back down in here, I didn't really find the reason for it. And that's the reason why I was willing to go long in here, is because I didn't find a reason for price to drop all the way back down in here. And to make note as well, on a 15-minute time frame, I think it's the most clear, is there is a bullish breaker. So this last up close candle, if you extend it out in time, this last up close candle, you have a low, a high, a lower low, then a higher high. So that's a bullish breaker. And if we go back to a 5-minute, that's exactly where that 5-minute for value gap. So it was a good trade in hindsight, but in real time when I'm watching it, there was some factors that I was not agreeing with. NQ wasn't really wanting to go higher. And once it made the move higher here, NQ was perking up. It was moving higher. So I thought it was, they're all going to start moving in sync a little bit higher. So again, everything in hindsight is easy to say. And that's the reason why I'm so transparent. And even calling draws on liquidity, it's extremely easy, but being able to be the trader and get into the position and manage it is a whole different story. So that's the whole point of these videos, is, especially with this account, is to provide that transparency so you guys can go forth and look at social media in a different lens and a different view. And hopefully I can shine some light on that, because I think there's a lot of people out there that don't really show this type of, transparency to it. So after we drop down into here, that's immediately when I just didn't know, because this is something that I was not expecting. When something happens that I don't expect it, immediately signals me that I'm off and I'm out of sync, and it signals me to basically go sidelines and neutral and probably close the charts. So really it was just a seek and destroy day where you're taking out sell stops, taking out buy stops, and then we're just returning into equilibrium. Yeah, we did have a run higher in here to take out the high one more time, and then we collapsed lower. But I'm not willing to chase any of this. There's nothing in here that was really fruitful. And that's another pro that I love to pull out, especially on days where you do take a loss. It's okay. I didn't jump back into the market. I didn't FOMO. I didn't do anything else. And I think for me, especially, is a huge, huge win, because I suffered from tilt, basically meaning that you're going back in the market, revenge trading. I suffered from that immensely for many years. And it's something that I've overcome a lot, and I'm very proud of myself. So, all of this is aimlessly trading in here. We dropped down into a discount again, relative. Once it made that new dealing range high from this dealing range low to high here, we dropped down into a discount, extend out the inversion for value gap. We're taking out sell stops in here, and then we're rallying higher in the PM session, dropping down into a bullish breaker here. So we have a low, high, lower low, then we have a higher high, drops down into the bullish breaker. and we expand away to take out that high once more. And then we just basically trade sideways and hug the new week opening gap. And it's pretty amazing and a great phenomenon with the new week opening gap, how much it really utilizes it. So overall, really wasn't that significant of a day. Yes, there's a lot of things happening in here, but when you look at the terms of range and the points, nothing significant happened. So hopefully I was able to provide some clarity in that. Like I said, this is still very muddy, very sloppy price action, meaning that I can't get a read on it right now. I'll have to see what happens overnight and pre-market tomorrow. My idea, gun to my head, I would see the volume bounce seeked tomorrow. That would be my idea. I would rather that happen, but we could, obviously we could collapse lower by all means. It's not something I prefer or want, but that's going to be it for today. I'm sorry, let me pull up the account in here. So I took a 0.25 or 0.26% loss today on that trade. So down 1.14%. And I wanted to make note, I started the account on May 6th and is now June 6th. So I was reviewing, obviously, the equity curve in here and reviewing my performance. And it's been a tough month, obviously, the last 30 days for me. But to me, I always like to pull out the most positives. And if the worst that I can do in a month is being in drawdown about 1.14%, I'm very happy with that. I give myself a pat on the back. I think that's managing your equity and being a really good risk manager, because at the end of the day, that's what we are. We're risk managers. And if you can do that well and execute that well, you're going to be able to stay in the game for a very long time. So that's going to be it for me tonight. Until tomorrow, good luck and good trading, everybody. Be safe.